Welcome everyone to Vested Interest. This is Shane back for a stock pick of the day video. It is Wednesday, March 12th. We're going to take a look at Colgate Palmolive. This is out of the consumer staples sector. Before we get too far in the video, if you could do me a big favor, this doesn't take but a couple seconds of your time. It is free to do, but it does really help out a small YouTube channel like mine with the YouTube algorithm. It helps to spread the videos a little further. If you could hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, make sure you subscribe to the channel. A lot of viewers out there, you come back to the channel over and over again and you're just not subscribed. And since you come back over and over again, it makes me think that you like the channel. So go ahead and hit that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell down below as well so you're notified whenever I put out any new content. I do this Stock Pick of the Day video series Monday through Thursday when the market's open. We take a look at a company that's pulled back on the day, run it through the screener, see if it makes it onto my watch list. And there is the thanks button down below for anyone who might want to help monetarily. Buy me a cup of coffee down there. That is a way to help the channel as well. And share with anyone you think that might find value in the content or any investors you know out there. That's another way to spread the channel here. And watch to the end. Watch time is apparently one of the metrics YouTube looks at as well. So if you could watch the videos to the end, that would be great. Again, thank you to everyone who's taken the time to do that. And a special thank you to the viewers and subscribers of the channel. The channel continues to grow because of people like you. This is the Vested Interest Stock Screener. This is how we'll be running through the video today. We'll check it out at the end and see how it stacks up. 5 of 8 is the criteria to make it onto the watch list, or 6 of 9 if it was a financial company, something out of the financial sector like a bank, insurance company. We add in price to book. You can use price to book for any company, just don't blindly use one as fair value. That's really for financial companies. Again, price to book, if you're using it for other companies, you want to compare it to its historical price to book as well as other companies in the same sector. Now back to Colgate Palmolive. Check them out on their homepage, www.colgatepalmolive.com. That's www.colgatepalmolive.com. www.colgatepalmolive.com. The small soap company and candle business that William Colgate began in New York City early 19th century is now more than 200 years later a truly global company serving hundreds of millions of consumers worldwide. Throughout this history, Colgate people and Colgate values have been at the heart of our success. And it's pretty cool. If you go to their webpage there, you'll see their history, right? It starts out at 1806. William Colgate starts a starch, soap, and candle business on Dutch Street in New York City. Fast forward a little bit to 1864. B.J. Johnson opens a soap factory in Milwaukee, Wisconsin, which later becomes the Palmolive Company, right? So there's your Colgate startup. There's where Palmolive comes into play. A little over 50 years later. Then you've got 1873 here. Colgate starts selling aromatic toothpaste in jars, right? There's the toothpaste that we all know today. 1920, Colgate begins establishing operations in Europe, Asia, Latin America, and Africa. So in the 1920s, they started expanding around the world. Fast forward to 1991, Colgate acquires Murphy Oil Soap. A lot of acquisitions from the 90s on. This is one of them, the leading wood cleaner in the United States today. Its product portfolio has expanded to include all-purpose cleaners, sprays, and wipes. Fast forward to 2013, Hills enters the naturals segment with a launch of Hills Ideal Balance. So that's your dog food, cat food brands there. So they are a pretty diversified company as well, right? They've got toothpaste, they've got soaps, they've got dog and cat food. And then present, Colgate continues to focus on oral care, personal care, home care, and pet nutrition, and sells its products in over 200 countries and territories worldwide. So a worldwide company with their hands in a lot of different products, kind of spanning the gambit there. A lot of things you might have in your household, whether it's in your cupboards, soaps you use, toothpaste you're brushing your teeth with, or food you're feeding your dogs. A lot of products underneath their umbrella. Kind of similar to a Procter & Gamble type of company. Now, the reason we are taking a look at Colgate Palmolive Company, ticker CL, out of the consumer staples sector today, they were down 3.49%, closed out the day at $90.82. Looks like they're down a little bit in the after hours, at least when I pulled this up. 52-week range as low as $85.32, as high as $109.30. They are within 15% of a 52-week low currently. Market cap of 73.704 billion, a beta of 0.39, so less volatile than the overall market. PE ratio, this seems a little bit elevated for a company like this, $25.87 per share. EPS, earnings per share, sitting at $3.51 per share. Earnings date coming up at the end of April, April 25th. Forward dividend is $2. Divide by 4, though we'll see that here in a little bit. They are a quarterly payer. Dividend yield at 2.13% currently is where you'd start out if you were to buy them now. Ex-dividend date, January 21st. Looks like they paid out February 14th. So for those of you who owned it, you got it on Valentine's Day there. So you would be in line for the next dividend payout, though you're going to have to wait a couple months to get it. And according to Yahoo Finance here, 1-year target estimate of $97.14. So they see it going back up from where it is, but not quite back to its 52-week high. Now, I like to look at dividend yield theory to see if the company is potentially undervalued. It's just a quick check. To do that, we look at their 5-year dividend yield average, 2.3%. We compare that to their current 2.13%, or over here forward 2.13, same number. Since this is lower than their 5-year average, that speaks to overvaluation. At least right now, according to dividend yield theory, they are potentially overvalued. Payout ratio is under the 75% I look for at 56.41%. So it gives them room to continue to raise that dividend over time. They don't look like they're in jeopardy of a dividend cut anytime soon, at least according to their payout ratio currently. Dropping down, I want growing free cash flow over time. Typically, if a company has growing free cash flow, they can do some things with that free cash flow. They can pay down debt, make acquisitions, which this company has been doing since the 90s, or even before that, really. They do buy other companies out and add them to their brand there. So we want them to be able to do that, pay down debt, pay a dividend, which they do, raise the dividend over time, or repurchase shares, which they are doing as well. But looking back here at December 2021, you can see $2.7 billion in free cash flow, down in 2022 to $1.8 billion, back up in 2023 to $3 billion, and back up again in 2024 to $3.5 billion. So it looks like from 2022 to 2024, growing free cash flow, but there was the downtrend there in 2021. They are repurchasing shares as well, $1.3 billion in 2021, 2022, $1.3 billion, 2023, $1.1 billion, and 2024, $1.7 billion. So I like that they're pulling shares out of the market. Jumping over to stockanalysis.com, this is another source I go to for information. You pick any sources that you like. I do recommend more than 1, 2, if not 3 sources, so you can make sure the information you are getting is accurate and up to date. They last updated February 3rd, 2025, so that's already about a month old. But 18 analysts that did look at it back then, they did call it a consensus buy. Low estimate of $83, which would represent a 8.61% decrease from where it currently sits. Average estimate of $101.44, pretty close to what we saw with Yahoo Finance on the previous page. That would represent 11.69% increase from where it currently sits. And if it happened to hit their high of $112, that would be a new all-time high, 52-week high, but that would also represent a 23.32% increase from where it currently sits. All the while, you can collect that 2+% dividend yield, at least where they currently are at. I like to look at statistics and look at return on equity and return on invested capital as part of the initial screener. I like 10% or better for both of these metrics. Return on equity, I think this is by far the highest I've ever seen, 406.26%. Again, return on equity, ROE, 406.26%, smoking high. Return on invested capital, ROIC, is 27.85%. Very good. Overall, both well above 10% there. EPS growth, earnings per share growth, forecasted at 7.05%. That's above the 5% I like, forecasted over the next 5 years. Revenue growth forecasted at 11.78%. Now looking at their dividend history as we wrap this one up before we look back at the screener here. Quarterly payer, as we mentioned, payout ratio 56.98. Again, well under the 75% I look for. Dividend growth of 4.1% or 4.17%. So they are growing the dividend. Dividend growth is 62 years. Buyback yield is positive at 0.72%. So if they're buying back shares at opportune times, or at least when they're relatively cheap, shareholder yield at 2.9%. They do pay out on the February, May, August, November timeframe, which is off schedule for most companies. So that would be an easy way to kind of balance out your portfolio. If you're looking for something that pays in the February, May, August, November timeframe, this would be a company that fits that bill. Now going back to July 2022 here, you can see 47 cents paid out in dividends. April 2023 up to 48 cents. April 2024 up to 50 cents. And I would say if they're going to continue that trend, it'll be the April report out when they raise it again. All right, let's get back to the screener here. Understand the business. That's where we started. Again, Colgate Palmolive. You probably are aware of some of the products that they sell. It might be the toothpaste you're using, dog food that you're using, soap, maybe your dishwasher detergent there is Palmolive. Plenty of products out there. Shaving cream they've got a lot of products under their umbrella. Growing free cash flow, no. We had a down year there. Looks like the past 3 years, but 2021 was a bit of a down year. Growing dividend, yes, they are growing the dividend a little over 4%. Dividend payout ratio is under 75%, around 56%. Dividend yield theory says they're actually potentially undervalued. It is within 15% of a 52-week low. Return on invested capital, return on equity, both well over 10%. Earnings per share growth well over 5%. It does have 3, 4, 5, 6 of 8. It is on my watch list. I like this company. I have Procter & Gamble already in my portfolio, so it's a similar company to that. I've been kind of up in the air whether I would add this or just continue to add to Procter & Gamble. At the right price, I think I would add this one, but I want more of a pullback before I do. Like I said, I would be fine with adding to Procter & Gamble versus adding another position right now. But there's always the potential that if this one was to pull back in the right price range, this one could get added to the portfolio. These are a lot of products there, right? You're going to continue to feed your dog even if there's a downturn, or cat, if there's a downturn, you're going to continue to brush your teeth most likely. You're probably going to continue to wash your dishes and wash your body with soap. So these are products that are sticky. You're going to buy them, like I said, even if there's a downturn. So a company like this is pretty sticky as well. Let me know what you think of Colgate Palmolive in the comment section down below. Do you own it? Are you watching it? Are you maybe part of the reason it's down? Maybe you're selling Colgate Palmolive. Maybe you're up quite a bit and you're looking to book some profits. Would love to hear from you in the comment section down below. And that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of the video. Let me know what you think of Colgate Palmolive. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. If you have a company like Colgate Palmolive you'd like me to cover in the Stock Pick of the Day series, drop it in the comment section. I'll work it in the rotation on a day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you are not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor. And if you've made it this far into the video, make sure you hit that like button down below. Share with anyone you think might find value in the content. Drop a comment and make sure you're subscribed and click that notification bell.